Anyway, let's get a preview of the auction activity that's expected around Australia this weekend. More than 3,600 auctions are penciled in for tomorrow across Australia. In Sydney, there's a big jump there. More than 1,000 properties are scheduled to be sold. Melbourne also strong, you can see here, 1,526 to be sold. In Brisbane, more than 200 will go under the hammer. Adelaide, 205 auctions, you can see there. And in Canberra, 152 auctions. So it's going to be pretty busy. Looking at the most viewed auction listings set to be sold this weekend, 3 of them in Adelaide, 2 of them in Victoria, 2 of those properties in Adelaide, both in the suburb of Rye. But the most viewed listing is number 107A Devereux Road in Beaumont, expected to be sold for around $2 million. And that top listing is a 4-bedroom beauty. It's going to be in Burleigh Waters, Queensland, and it's called Ruin X. It's being billed as a one-of-a-kind work of art, which showcases Render X, a creative form of internal cement rendering that gives the feeling of Venetian sort of living. The entire home has textural rendered finishes throughout, cement floors, and features arches, large windows, and curved high ceilings. Quite unique. The kitchen is fitted out with a rare Italian onyx marble island bench and even has cement rendered cabinets. They like their cement. The dining room features a giant chandelier, while the garden has an arched pool with a custom rendered diving board. The home has 2 bathrooms, a powder room, a double lock-up garage, along with 2 6-metre-high canary palm trees flanking a bronze rendered, of course it's rendered, front door. Ruin X is scheduled for auction on March 13. Let's bring in here Angus Moore, economist with REA Group. And Angus, clearly the volatility on stock markets, all the talk of higher interest rates, it doesn't seem to have dampened off the property markets by one iota.
No, that's right, Russ. It's great to be here with you. We're certainly going to see a very busy weekend this year, and it's really been the theme of this year. You know, we've seen more new listings in January than we have in any January for the past 8 years. We're seeing a lot of sales as a result and a lot of auctions. In fact, sales are tracking at the pace that they were last year, and that's really notable because last year was busy. We saw more sales last year than we did in 2019 or 2020. There's really 2 reasons behind why we're seeing such activity in the market. The first is that we're seeing a lot of vendor confidence. People are really willing to come to market to list. Part of that's that lockdowns are hopefully behind us now, and so there's less disruption in the market. And part of it is that we're just seeing really strong buyer demand across a range of metrics. The other reason is that a lot of vendors are looking at big equity gains. Many people have experienced big price rises, and that means they've got a bigger deposit and they can look to bring forward their upgrade plans, and so are coming to market to cash in on that. All of that means we're starting to see more new listings come to market, and that's helping ease conditions for buyers a little. It's becoming a little less competitive and some of the heat's coming out of the market, but we would still call it a seller's market. It's still very competitive out there. Properties are still selling very quickly. So we expect that clearance rates this weekend will stay pretty high, but maybe not as high as at the same time last year.
How much do you reckon there is, Angus, out there at the moment? There's a bit of FOMO out there, the fear of missing out, that people are actually jumping in because they're just worried that in 6 months' time these prices could be higher again. And they're just missing out. There seems to be that sense out there. Certainly last year it was there.
Certainly last year we saw very high buyer demand, in fact, record across a number of the metrics that we track. And that has continued into this year. We're certainly seeing a lot of interest in property. Maybe a little off what we saw last year, but still very, very strong. I think the other factor here is that some buyers are probably looking at the prospect of interest rate rises later in the year or potentially early next year and are wanting to get in before that happens.
Yeah, that's true. But the weird thing is, I guess you can see the fixed rate loans have gone up pretty significantly. You can't get one in the ones anymore for that. And the second part about this is, at some point in time, once the RBA starts to move, that's when the variable rates start to go. So again, you're right, though. People are factoring this in and looking at their wages growth. And if wages are starting to move, they think they can get a pay rise. Of course, their ability to service that loan just improves for them.
That's exactly right. Certainly we have seen fixed rates go up this year, and they're certainly well off where they were last year when we were seeing, as you said, one handles on mortgage rates. But variable rates remain low. Competition for borrowers remains really tough among the banks, and so we are seeing low variable rates. Though, as you say, they will rise as interest rates rise later in the year or early next.
Okay, so then the other side of this is international borders opening. Just quickly here, because that's got to have an impact, because if there's more population coming in, there's demand for rentals, then there's obviously a better return for investors. That goes into the mix a little bit, and maybe why some investors are chasing it as well.
Yeah, exactly. You're exactly right. And I think there's a few things going on there. So, one, over 2021, we actually saw a lot of investors sell out of the market. Many look to lock in their price growth, and rental markets with lockdowns were a bit quiet. That will probably start to change this year, and we are already seeing investor new lending pick up. The other is, with borders open, which is a good thing all around, I think, we will start to see more temporary migrants to Australia, and particularly students. Australia's always had a really vibrant higher education sector, and those students tend to live in inner city areas. That's where most of our major universities are located. They tend to be renters. And so we will start to see demand come back. And in fact, if we look over the past 2 years, the sort of places where those renters tend to live, places like inner Melbourne or inner city, I've actually seen rents fall quite a lot. Melbourne median rents have fallen by as much as a quarter. So
yes, I've got to jump in.
To see that change.
Now, Angus, I've got to jump in there, and I apologise for that. We're just running short of time. So many thanks for your time today. Angus Moore from REA Group.
Pleasure.